What's up, everyone? Drew, aka Catching Rockets here. Hopefully, y'all had a good day today. I actually took the day off. I didn't trade at all. Didn't even turn on my computer. Didn't open a single chart. Didn't do anything. I overslept this morning, and when I finally did wake up, I just wasn't feeling it. Well, to say I didn't open a chart is a little bit of a lie. I looked at a chart on my phone, and I was like, "Oh, this is actually like a good long opportunity here," and it was on NQ. I think we were right here, and I was like, "Oh, this is a good spot to buy up." But I just rolled over and went back to sleep. I didn't trade. Yeah, I didn't see too much on SPY. You know, this was our level for short. They came really close. Hopefully, somebody caught this. Like, this is your, when we talk about the poor highs, they need to go above and clean it up and then go lower. And this is definitely going above, cleaning up, and going lower. We just didn't quite nail the level that they went to. We were off by under 20 cents, which is a bummer. Or, this is another setup we talk about, which is like the peak above and fail. When you quickly break through a level and then immediately come back down through it. That would be a short. Anyway, really hope you guys caught this. I would have called it out if I was live. It's also basically your open drive, right, which we've talked about. Let's pull it up again just for anybody that's new or doesn't know what I'm talking about. If you haven't read this book, you should, and you should understand these setups like the back of your hand. Your open drive is when basically the market opens. This low volatility area is like pre-market. When the market opens, wherever we open from, come back to, you would grab the same direction that we went from the open. So in this case, price shot up at the open, came back, retested, you would grab calls or go long. In this instance here, sold off, came back, short, or take puts. Same one here. Open, sold off, came back, take puts. And so hopefully you guys see that. Open, sold off, came back, take puts. Right? So a couple of good setups right there. With that said, let's chart. Excuse me. Let's chart SPY. I didn't have time to look for any option setups. I have work tomorrow, and so I took a nap. I just woke up right now. I actually have work the next 5 days because we're short-staffed so much that I picked up extra days here and there. So I'm going to be busy. We'll still be doing our daily videos. I'm just going to be complaining about how tired I am. 5 days might not sound like much, but 5 12-hour shifts is a lot, especially in a field where it's mentally exhausting sometimes. All right, there's our session volume profile levels. Let's look at TPO. It looks like this is probably going to be a pretty quick video because I don't have very much to cover. We really have failed auctions, both top and bottom. Wow, okay. I don't like these days. I like it when we have like a clear, concise, like level for puts, level for calls. So we have a poor low and we have a poor high. This basically leaves us looking kind of like yesterday, where we're still looking for a short at this level. Or I should say today, sorry. The difference tomorrow is it's going to be very nautical. We have, Opex, right? And when I say very nautical, I mean it's going to be very volatile. Let's take a peek at news. So, a couple of things. Here's our news for tomorrow. This won't affect you guys too much if you're not trading futures, but 2 a.m. England retail sales month over month. And then this here will affect us a little bit as the building permits like 1 hour before the market opens. But the big thing that's going to create volatility tomorrow is Opex. And if you're not familiar with what that is, it's the options expiration calendar. And so this is the 17th, or they expire on the 18th, but the markets aren't open. So everybody needs to close their positions on options that expire on Friday. And then we have a long weekend, Saturday, Sunday, Monday. Monday is Martin Luther King Day, I believe. And so tomorrow you get a lot of volatility with people trying to close their options positions. So Opex stands for options expiration calendar. Okay. Oh, thank you, Odyssey. I appreciate that. What's up, Brian? Hey, what's up, Space Monkey? I don't know if you mind me saying your first name on YouTube, but it's weird calling you Space Monkey. What's up, Yannick? What's up, Melvin? What's up, Banner? What's up, David Ryan? How you doing? Hey, what's up, Corey? Well, it could be any strong move. Yeah, Brian. What Brian's saying is like any time where you have here, let's just pull it up again, the open drive. But it wouldn't be called an open drive at different times of the day because it's not the open, right? But what you're saying is technically correct because it's just called something different, but it's the same thing essentially. And so what you're talking about is this, where you have sideways price action, aggressive selling, come back to there, you would take puts. Sideways price action, aggressive buying, come back, take calls, right? So that's what you're referring to. And what we're looking at is specifically at the open. I think it's at the open. Okay, it's not at the open. I'm wrong. You're right. I'm wrong. And I'm good with that. It doesn't really matter. I guess I misunderstood it. I interpreted the open drive as being only at the open, and you still recognize, both. Or in my head, you still recognize both. Just one happens at the open, one happens on different time frames. But what you're looking for is like sideways price action, which generally happens before the market open, right? Pre-market. If you see this during the day, then you want to see that sideways price action. And when we have sideways price action, they're generally either accumulating or distributing, right? And so then we either get a sell-off or we get a big run-up. And then it's saying that you want to see, where was it? Well, I just read it. I can't find it. It doesn't really matter. But you're looking for a few candles below, closing below, basically confirming that the price is accepted lower. And then when they come back to that level, you would enter puts, or the inverse, sideways price action, rip up, a few candles closing above, retest, grab calls. So it's not specifically at the open, it's any time frame. I misunderstood that a little bit. I did recognize both, just thought that one was called something different and the open drive was specifically just to the market open. But I guess I was wrong. And I'm good. Like, I never have an ego about stuff like that. Like, I'm always happy to learn and grow. I still study. I still try to get better every single day. Still try to grow every single day. And I think yesterday's stream, somebody asked me about like failed initial balance. And I specifically said like, oh, I don't know, like we'll have to ask Shorty. And it's the same thing. Like I'm not egotistical. I don't think I know everything. I know I don't know everything. Always trying to learn and get better, What's up, Rudy? How you doing? Anyway, thank you, Brian, for pointing that out. I misunderstood it, so that's cool. What's up, Nathan? How you doing? What's up, Little Mind? What's up, GG? What's up, Straight from the Pen? What's up, Odyssey Flights? Sorry, Odyssey Fights. I already said thank you to you for thanking me for my service. I really appreciate that. It means a lot. Oh, okay. So Space Monkey is I mean, I've talked about him before on the stream, but he's the family friend. His name is Robert. Really, really good guy. And it's weird calling him Space Monkey. What's up, Triple G? What's up, Rathana? What's up, Dwayne? What's up, Jack? How's it going, Tony? Oh, okay, cool, Brian. Yeah. Yeah, you're definitely a nerd, Brian. I'm just playing. It's all good, bro. I'm actually, like I said, I'm super stoked to learn something. That's cool. Hey, what's up, Oliver? How you doing? That's all I've got, guys. It's going to be very volatile today. Or, sorry, very volatile tomorrow with the options expirations. So be aware. There's going to be, big swings in price. You're going to want to close your positions and open your positions quickly, because you could get a big swing against you very easily tomorrow. So just be aware. It's going to be very, very volatile. And days like tomorrow might be the reason that, people, or like retail and like, what's it called? Influencers will say things like don't trade Fridays, because Fridays is always the day that you have the option expiration. But it's not every Friday. But those Fridays that we do have it are extremely volatile, and price action will get swingy. What's up, Emily? Oh, yeah, I guess we can draw SIGs, huh? Good call. And we'll just kind of teach it. For anybody that doesn't know SIGs, when you have 2 days or more that overlap your volume profile, so like today, today's value area is inside of yesterday's value area. It's completely inside of, which just generally kind of means that we're setting up for like a big move up or down. I want to show examples where you can't draw SIGs. So on these 2 days, we can draw SIGs. What's this down here? Let's delete those. on these 3 days, you can draw sigs because we're slightly overlapping and overlapping here, right? From here to here, you can't draw sigs. And the reason I'm covering this is I've had some weird, like, people are like, hey, the sigs from today. I'm like, dude, you can't draw sigs today. They're not overlapping, right? So like here, there's a gap between our value areas. We can't draw sigs. Here we can draw sigs. Here we cannot draw sigs, right? And then here we could draw sigs on all 3 days. All 3 days, this is barely overlapping, but it's overlapping nonetheless. So what you do when you have that is you're going to grab your fixed range volume profile. You're going to go from the first candle of the first day to the last candle of the last day. And once you've done that, I turn off session volume profile to make this cleaner so I can see better. You're going to change your value area volume to 68 if it's not there. And that's going to give you your first sigs. I will draw this, but if you're charting, you probably want to just combine your previous day value area low and your first sig because they're so close to each other. But for argument's sake, for charting this live, I'm just going to draw both, even though they're going to be overlapping. And then SIGs, from here we go to 95%. They're based on the bell curve. So it's math, and it's where you're most likely to see like rejections and bounces. I'll pull up the actual like PowerPoint from Shorty on it. But they're always, whenever you can draw SIGs, they're good to have on your chart, because they generally act as a support or resistance. From here we go to value area volume 99, and this gives us our third SIGs. And as a rule of thumb, like when we're coming to second SIGs or third SIGs is when I'm like really like, ooh, we might really like see a reaction at this level. First SIGs, every once in a while you'll see something, but don't do that to me. Oh wait, I did grab the right one. So yeah, I really start to get excited when we come to like third or second SIGs. You generally always will see a reaction, like a bounce or a rejection at those levels. So those are SIGs. If you guys have questions, now is the time, because I am done. I don't have anything else to cover. I might be able to call out some trades tomorrow after I get home. Or maybe I'll even just see something on naked price action like I did. I'm trying to think what day it was. I think it was Tuesday. I called out like a short on SPY just based off of candles on my phone. Thanks, Lisa. I guess when you see this, I appreciate you too. Thank you. I hope you have a good evening. Who's a friend, Brian? Range expansion day. So this is a range expansion day. It's not something I've ever heard of, but that doesn't mean anything. Like, like we're all going to learn different things. Oh, thank you, Gigi. I really appreciate that. Again, like they've probably read a different book than me or whatever, and that's fine. But a range expansion day is a trading day when there's a sudden increase in volatility after a period of lower volatility. This increase in volatility can be a sign of opportunities for traders. So basically, I didn't know the expression range expansion day. I just know, we've had 2 days of kind of like sideways. I mean, actually, sorry, I take that back. Wednesday was not really sideways. It was a typical extended day, meaning that we started out as kind of a typical day, just up and down. And then at the end of the day, we had an extension of that typical day. It just went a little bit higher, right? But nothing crazy. Today, D-shaped volume profile, we just kind of traded sideways all day. And then, like we talked about, for tomorrow, we should get like a pretty good move, increased volatility due to our Opex. Dan, you're going to want to rewatch because I already talked about that. I saw... oh, sorry. Let me catch up here really quick. Oh, nice, Daryl. That's a good idea. Yep. So, Adita, I hope I said your name right. For SIGs, depending on what time period you're looking for, you need to have two overlapping. So it could be, or two or more, I should say. You could have 2 days, you could have 2 weeks, you could have 2 months, you could have 2 years. And so it would be the same. Like if we're looking at daily, we're looking on 30 minutes. If we're looking at weekly, we're looking at 65 minutes. If we're looking at monthly, we're looking at 4 hour. And if we're looking at yearly, we're looking at daily candles, right? And so we need to, basically anytime where we have two of those overlapping or more, we can draw SIGs. So, Dan, I wouldn't mind covering it again, but with me having already removed levels and everything, it's kind of hard for me to cover it again. So basically just go back and rewatch the video. I didn't look for a bunch, but I covered one really good setup. I can kind of cover it here, but we had our poor high. I don't remember. I think it was right here, where our second SIG basically is now. And then we had an open drive where we sold off from right here. I don't like that line. We sold off at the open from here, had candles below, came back, retested that. That's your short. That's your open drive. And I also pulled up like a reference from Trader Dale's book to show that. So. There's no spike on SPY today. Like, Daryl, I don't know if you're just asking like a general question about TPO, but today there is no spike, right? I didn't look really close, but yeah, we don't have a spike. To have a spike, SPY needs to go lower than this IJ period, right? Oh, nice, Colby. Thanks. I appreciate the, you being a friend of the stream for 6 months. That's awesome. Hey, what's up, Nora? How you doing? Good to see you. Dan, I have 3 books that I recommend. I'll just link them really quick. It's the easiest way to do it. But they are also linked in the description of the stream. Give me a second. I'll get that for you. But so the book I'm referencing is called Volume Profile by Trader Dale. It's probably one of the best trading books ever made. It's a like must read. There's the 3 books that I recommend reading. Yeah, and so Dan, when I say this, chart patterns are pretty shit to trade off of. The reason being is like market makers know about chart patterns and they'll specifically fake out retail because retail all thinks that, you know, price is going to go one way based on the chart pattern, and they'll make it go the other way just enough to stop everybody out, and then they'll make the run that everybody was expecting. So I don't recommend trading chart patterns too much. It's good to be able to recognize them when they're there, but I don't personally trade off of them. I think the only chart pattern I really like to trade off of is diamond tops and diamond bottoms, because they're pretty deadly whenever you see one. What else? And I guess to continue what I'm saying, like here on this channel, so for anybody new that might not know this, like I was mentored by Shorty. Shorty was a market maker. And so Shorty's whole thing about like teaching retail traders is teaching us to be able to spot the things that market makers can't hide from us. And the things that market makers can't hide from us is going to be our volume profile, order flow, footprints, TPO. And so those are the things that he teaches. Those are the things that I teach on this channel. And that's everything that I trade off of, is all of those things that I just mentioned. Because those things can't be hidden. And once, you know, like you can't hide like market makers can't hide their orders. They can't hide their volume. So you're able to see that stuff. Yeah, Alan, the spike is only on the M period, not on the N period. Hey, what's up, Jason? How you doing? Emily, futures trading platform. This is one of those very vague questions that people ask that's very hard to answer, because the trading platform that I use might not work for somebody else. I trade on a Windows computer. If you don't have a Windows computer, you can't trade on the platform that I use. If you're trading on a Mac, I highly recommend you throw it out the window and buy a Windows-based computer. If you can't afford to do that, then you're limited on what you can trade on. There's very few trading platforms that work with Macs. And if you're trading on a phone, you know, there's even fewer trading platforms that work on phones. And basically, so to kind of like blanket encompass answering your question, if you're wanting to trade with your own money, the best platform to go with for like trading on a phone or a Mac is going to be Tradeovate. If you're trading with your own money and you're on a Windows computer, the best platform is going to be AMP Futures. But you want to specifically use the link. So like if you search if you search for AMP Futures free quant hour, you'll find a link here. And when you get there, it says, you know, free quant hour, full version, free for AMP customers. If you sign up for AMP through this link and deposit, I think you have to deposit at least $100, but you kind of need that much or you need more than that really to trade futures anyway. But through this, you'll get access to free quant hour, which is like normally $70 a month. Where, I mean, you can trade with quant hour for free, but if you want all of the features, it's $70 a month, or you can buy like the lifetime for $15.90. if you're wanting to trade on a prop firm and you're like on a Mac or a phone or a tablet, then you would want to go with what's it called? Why can't I think? Apex. Oh my gosh, like I had a total brain fart. So this is the link for Apex. And then I'll give you guys, when I give you this is my referral code. I always am honest. Like if I send a link where I'm going to make money off of, I'm always honest about that stuff. But so if you use that referral code, you get like 80% off. So you get a deal, and I get like a tiny commission based on you using my link, or you can use this link directly, which will automatically put in the code for you. But so you can sign up through Apex and sign up for a Trade-Evate account through Apex, and on that account you could trade on a prop firm through Trade-Evate with like a phone, a tablet, or a Macintosh. If you're wanting to trade on a Windows-based computer on a prop firm, then I would recommend going through TopStep. And when you go through TopStep, you're going to want to sign up for a Quantower account and sign up to Quantower. And then TopStep, I do not get any kind of referral for. Oh, I didn't know that you could use AMP with mobile. That's good to know. Thank you, John. But so yeah, the TopStep link is not a referral code, just an FYI. Yeah, Dan, they totally know that retail's always looking for chart patterns. Yeah. Colby's saying there's a spike on Qs. Yes, there is. So basically your November POC is your spike, and your spike base is going to be 513.48. All right. Jay Washington, I completely trust. Well, the prop firms I mentioned, so Apex and TopStep, I completely trust them. I've got payouts on both, and it's a great way to start if you don't have a ton of capital. And then you build up your capital, and then you want to trade with your own money. If you can afford to trade with your own money, that would be the best way to go. Like if you have enough capital of your own to trade, then you want to, you would want to trade with your own money. Just because when you're trading with a prop firm, you're basically like a 1099. So you don't have any tax incentives. Whereas if you're trading with your own money on futures, and when I say this, I'm not a CPA, so like take everything I say about, about taxes and stuff like that with a grain of salt. You should always consult with a professional, but you can kind of Google this. Futures are taxed at a 40-60 tax rate. And so short-term capital gains from stocks or ETFs are taxed at your ordinary tax rate, which is not true. They're taxed at capital gains tax, or I guess maybe they're referring to your ordinary tax rate being capital gains. Futures are taxed using a 60-40 rule. 60% are taxed at the long-term capital gains tax rate of 15%, while only 40% of your short-term capital gains are taxed at your ordinary tax rate, which would be that 40% would be capital gains. So, like this is just one more reason that it's better to trade futures, because you have better tax rates than trading options, where you're going to be taxed 100% at your capital gains tax rate, unless you're holding your position for over a year. And again, take all of that with a grain of salt. I am not a CPA. I'm not a professional tax consultant, and speak to a professional regarding that stuff. But that's my understanding of it. And yeah. Weird. So like Michael Anthony, sorry. All right, it looks like you've been in the channel for a little bit. Your comment seems kind of scammy, just an FYI. But yeah. Yeah, see, I wouldn't even look at a stock that is $10. Just not interested. To get me interested, you need to be over $10, and I mean, you need to be over $20, with very few exceptions. And I wouldn't be a buyer here. If I was interested in this at all, I would be a buyer down in this range here, but I'm not interested in this. This is the kind of stuff like influencers call out. And end up losing people a bunch of money. But yeah, certainly, when something's bounced this much, almost 10% is not when I'm buying. Like, never. I'm always trying to get in, close to the bottom, not after a 10% bounce. But, if you see something, go ahead and trade it. I don't think, and when I say this, like, all due respect, I just don't think my comment section is the place to, like, tell us what you see on a stock. Like, if you want to ask my opinion on MFA, that's cool, or any other stock or whatever. But, yeah, if you're wanting to call stuff out, there's probably a better platform than my chat. Yannick, that's hard to say. Minimum capital, it's going to really just depend on what you're trying to trade. You have to look at the, what's it called? You have to look at the margin requirements for whatever it is you're trying to trade. And so I'm pretty sure for one MES, it's like $50. And for one MNQ, I don't remember. But yeah, you would have to look. But I would say like somewhere between like $2,000 to $5,000, and then you're gonna have to start trading really small with something like that. Yeah, Big P. I mean, I just mentioned the one one benefit to trading futures, but yeah, with futures you don't have to worry about wash sales. If you don't know what that is, I would recommend Googling it and looking it up. It's a little bit hard to explain, but I'll do my best to try to explain it. A wash sale is a transaction in which an investor sells a losing security to claim the loss, and within 30 days, they buy back into a very similar or the same position. I didn't read that verbatim. I just started ad-libbing because their wording on this was kind of weird. But so basically, like, what happens is, I don't know, let's just say I'm in calls on SPY, right? And it's going against me. It hits my stop loss. And so I close the position. And then it comes back to like another key level. And I'm like, oh, I want to get back in puts here. I mean, I want to get back in calls here. And whatever, it works out and plays out in my favor. And as far as the U.S. government's concerned, you specifically closed this losing position, bought back into basically the same position at a lower price, And that way you're able to claim this as a loss and also take your profits. And so basically, if you close a position and within 30 days you open a similar position, they're not going to let you write off the loss. But you're going to have to pay taxes on all of your gains, and you're not going to be able to write off all of the losses. So there's people that have ended up with massive tax bills doing exactly what we just talked about. So something to be aware of. Why do I have like a random level here that doesn't mean anything? If you guys ever see me like draw a line just to like explain something and I don't erase it, please let me know, because I do that sometimes and then I'm like, what is that line? The like is free and not taxed. Well said, JC. Yeah. Jay Washington, I already went over everything on SPY, and then people started asking questions about futures, and so I'm answering them. Oh, thank you, Colby. So Colby's saying one MNQ is $100 of margin that's required. Dan, learning one whatever stock future whatever is very good, but really where it's at is trading futures. You don't have theta, you don't have Greeks, just easier to trade without those things. So that's my honest opinion, and I would recommend reading the books that I talked about and then DM me when you're done reading them. And then having a full-time job, futures are open 23 hours a day, so you can trade when you're not at work. Yeah, I mean, if you're buying a different strike price or even a different expiration, it shouldn't be considered a wash sale. But definitely check with your broker as far as that's concerned. Yeah. All right. I need to go get ready for work. Hopefully this was informative. Hopefully it helped some people out. And we'll be live tomorrow. Or wait, tomorrow's Friday. I won't be live tomorrow. I'll be live Saturday or Sunday. Tonight, Shorty will be going over futures. So I'll be doing a market update at 9 p.m. Eastern tonight. Definitely tune in and watch that. He always provides some very good, excellent content. And just be aware, though, when Shorty's live, he's not reading the YouTube chat. So if people aren't replying to you, don't take it personally. He just is not in YouTube reading the chat. I just, as a courtesy, stream, him going over it. And also doing it as a recording for the members of his Discord so they can always reference it and look back to it. As always, thank you to the people that subscribe to the stream. Extra big thank you to the friends of the stream. Massive thank you to GG for the donation today. I appreciate that. Anybody that's new, it might seem a little overwhelming right now, but we do a lot of teaching and a lot of education on this channel. Definitely the place to be. We don't hide anything behind a paywall. I don't sell courses. I'm not pushing a Discord. With that said, my mentor does have a Discord. You're welcome to join it. I don't have a Discord. His Discord is focused on education, but again, it's not a must. And when I say that, like, you're completely capable of learning all this stuff on your own. You don't need a mentor. You don't need to pay anybody. You don't need to pay for courses. Reading books is enough. Be aware of who you're listening to and who you're absorbing information from, because there's a lot of people out there that really don't know what they're talking about, and also influencers that just push random weird narratives that really do not apply to trading. And then once you learn that stuff, it's hard to unlearn it. Things like, whatever, trade on the 15-minute, not on the 5. Trade on the 3-minute, not the 5. Don't trade Fridays. Don't trade the first 30 minutes, blah, 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 blah. It's all BS. Your levels are the same any time of the day and on any time frame, and you trade your levels, and that's it. All right. With that said, much love, everybody. We will see you sometime this weekend. We'll go live and cover what we're watching. Actually, it might not even be this weekend because I just remembered the market's going to be closed on Monday. So I might go live Monday and cover what I'm watching for on Tuesday. But so we'll be live sometime, I don't know, between now and Monday and go over what we're looking for on Tuesday for Tuesday's trading day. So everybody have a good long weekend, get some rest, or get some studying in, and get at it, Anyway, much love, everybody, much respect. We'll see you all sometime between now and Monday. Much love, take care, peace out, bye.